It is the 18th of February 2011, and we're going to take a look at the US dollar index. And it's really a comparison with other currencies like the euro, a 57.6% weight. And I love this word weight, sort of like a troy ounce of silver is 31.1 grams. A troy ounce of gold is, well, also 31.1 grams. And $1 or one US index is 57.6% euro. Well, anyway, 57.6% of it's calculated within the euro, as well as a pound sterling, the Canadian dollar, the Swedish krona, the Swiss franc, and the Japanese yen. Mainly, obviously, it's the euro, then the yen, pound, Canadian dollar, and then Swedish krona and Swiss franc don't have too much value, I guess. Also notice there's no Chinese yuan on there, or no Australian dollar. Quite interesting. And all of these have the same similarities of being that of fiat. And the US dollar index goes up and down based solely on the direction of other fiat currency. And by the way, fiat is Latin for let it be done. And that's what they did. They just let it be done. They went off of the Bretton Woods system. And that's when the US index came into existence. It was at the end of the 1960s going into the 1970s. Also, the US dollar index can be traded, or also known as gambling, on the Intercontinental Exchange. So it's a chance to win or lose some of these digital dollars. And finally, the editor believes this economy/dollar is like a house of cards that is ready to fall. On November the 28th, 2010, I made this presentation for the US index, and it was set to collapse. Thankfully, there was almost 3,000 that have seen it, and the thumbs up to thumbs down ratio was impressive, something like 80 to 3 or something like that. Really magnificent, to say the least. And this was 4 minutes and 44 seconds in. I was talking about the dollar index here. It had this trend line. It broke through it. But I was also stating that the probabilities were that the US dollar index would move lower based on Fibonacci. I also stated that 78 would be needed to become support. I also stated that 80 was a massive level, and if this level was to become resistance on the long-term time frame, well, it would be lights out for the US dollar. So at this time frame, we can see that the dollar was a little over 80. Today it closed at 77.68. So there has been some resistance towards this level. Well, let's now go to today's charts. And we'll start off with the same sort of one that we had before. Now the difference with this chart and the current one is not only is there new data to today, but I've also backtracked and added some more. Therefore, to match this trend line with this one, it'd be pretty simple as just going like that. Yes, that's how steep this trend line is. It doesn't look as steep over here, but it's the exact same trend line. It's still, it broke it, and well, I was mentioning that it needed to find support at 78, and well, this is 78 right in here, and it's looking more along the lines of resistance at that level, but hey, it's a pierce below. It can very easily still be support, and it's a higher low. Well, for now, anyway, that this is that of a higher low. So what we'll do now is we'll take a look at some different trend lines. I think the big upward trend line is this one here, which has been support numerous occasions. Now, as far as resistance is concerned, if we connect these different highs in here. Well, there we go. This is the wedge pattern that we're currently in. And this is a long-term wedge pattern because it goes back to 2005. So it's been active for well over half a decade now. Ever since we have broken this trend line, well, it had a nice little rally after the markets all crashed, but the rally didn't live long. Whenever you have a pattern where you go up big like this and you fall down fast, it's not strong. Just as if you fall fast and then go back up like that, well, that's very, very strong. But that's not what we see here. We see it going up and then falling. So that's not bullish at all. Moving on to the next one, the longer term one. This doesn't have any times on it, but this is when it started though. And as I was stating, when you have something that goes up as it did right in here, and then, well, that's not strong whatsoever. Now, as far as this 80 number is concerned, it was almost support here. But at the time, people weren't thinking, oh, that's going to be support. No. And it was, well, not quite there. But it was support here. It was also support here, piercing a bit below it, and support here perfectly. And then we had a long time before we even seen this level. See, it comes up to here. So it broke this range, which is what you need to do in a bullish scenario. But when you have a situation where you come from a downtrend and you range through time like this, and then you finally rally, what you need to do is you either need to find support at previous resistance, which would be about 97 in here. That didn't happen. Or you can trust the old good Fibonacci. And the old good Fibonacci would state, well, from this low to this high, 61.8%. You can retrace that much, which would be approximately right here. Well, as you can see, that never happened either. So we came back down on this 80 mark. Found support again. But something happened here that never ever happened before. And that was, it did not find support at 80. No, it went through it. But barely. I mean, this here looks like maybe that this could be a bear trap and we could have a fast move to the upside. But at the same point, the the failed move could be this move in here. Don't know why that happened, but we're just going to move to the next chart, which is pretty much the same one, except for this one's a candlestick chart. And we've seen the same sort of deal here, and that is close to 80. There's that 80 test, and this in here is a nightmare. Shows a lot of indecision, and the bias seems very negative, or, well, bearish. I think bearish is a better word, because bearish is defined as a chart going lower, bullish defined as a chart going higher. Within this chart, we could build yet an even more super long-term pattern, a descending triangle. What's very noticeable here is over the last, heck, even back to 2003, the last 8 years or so, it has hugged the bottom part of this level. It's been testing support for quite some time, and the more often support is tested, well, the more likely it is able to be taken down. Now, whether this index goes higher or lower, it really doesn't state the strength of global currencies, only US currencies. I think one of the better things to determine global currencies would be that of either looking at gold or whatever inflationary numbers that you could find. And gold and all of the currencies, at least all the ones tracked by the US dollar index, are going higher in their currencies, and inflation is rapid within every country. But hey, I mean, when you understand how this stuff is created, it's very easy. And if you are not sure, some easy ways is to do a Google search. And if you want to know, it's because of how it is. Just do a Google search for this, look for the cartoon, you're ready to go. And all money is debt. Quite simple. That's it. Just debt. Now that's a good cartoon. I'm sure almost everyone has seen it on here. I also like the search for Zeitgeist Federal Reserve. I know that's a very controversial click or film. Either because they I can't even spell Zeitgeist right now. But Zeitgeist Federal Reserve. I'll put a link in the more info. As well as this is a new one. This one's really cool. It's a cartoon. They call it the American Dream. Now, of course, if you Google search American Dream, you're probably not going to come up with it. But if you put a Google search for American Dream plus cartoon, you will get it. It's a shorter clip. It's about 30 minutes or so. But it really does a good job in explaining currency. And when you are aware, well, then you can get time to prepare. Because if you would have asked me 3 years ago what it would be like on February 18th, 2011, I wouldn't have thought it would be like this today. I didn't think we would have had this long for preparation, but we've had. And there's also been nothing in the 3 years to make me think otherwise, that the currency's able to survive, or that I'm wrong about Take care, everyone.